I am Dave from London, who is just speculating on what the US government may or may not do. I have no idea.
Welcome to Fast Forward by Fastmarkets. I'm Andrea Hotter and we are back for season 3. Today we are joined by David Lilley, somebody who has spent a lifetime in the copper market. He spent years at Cargill, Philip Brothers, Metal Gesellschaft and Enron Metals. You may know him as a founding partner of Red Kite, and he's now the director and co-chief investment officer of Drakewood Capital Management. Quite honestly, he's forgotten more about copper than most of us will ever know. He's seen the shifts in the cycles, policy and supply shocks, the whole arc of how this market actually works. So with that, let's bring him in. David Lilley, welcome to Fast Forward. How are you?
I'm very well, and thank you for having me.
Oh, well, I'm thrilled that we could get you on the show. We have known each other a really long time and talked about copper over the years, so it's great to get you here.
Yeah, I don't think we should actually
I
admit the number of years. It's a little bit too many now, but anyway.
I know. Well, once we get going, it'll probably become quite obvious, I would imagine, but here we go. I do remember one conversation really standing out, actually, and it was back in 2005 when I distinctly remember you telling me that the copper market was about to go through 7 years of feast followed by 7 years of famine. And you know what? You were spot on. We had a bit of a feast from 2005 with the super cycle that peaked out in 2012. Then we saw 7 years of famine and then another feast in 2019. So by your maths and on that cyclical thesis, it's
Yeah, we're
2026.
getting
So
near the end.
yeah, are we on the verge of another famine?
I don't actually think so. I genuinely don't think so. But then again, I do have an inherent bias, I would say, that given that the excitement in the copper market is good for our business, I do probably have that bias. And I would, as we get into talking about this, I would say it's probably a little bit more nuanced at the moment than perhaps it has been over a little while. But the big picture long term themes, I think, still remain very supportive. So I think we'll extend it to 12 years of good years. I would also, or maybe, well, I don't know, or else I'd maybe just need to fix the recount. I need to fix the years and start counting in a different place.
Yeah, rewrite the cycles. Well, I guess that brings us to what's really driving prices today then, because the global political and economic backdrop is quite extraordinary at the moment. You know,
Mm.
Venezuela wasn't on my bingo card at the start of the year. You've got massive fragmenting of multilateralism, an explosion of trade tensions, a very slow dismantling of the world order. The list goes on and on and on.
Yeah.
So when you strip away the headlines, do you think copper is being driven more by the fundamentals, supply and demand, or by the fear, the uncertainty, and traders just reacting to what might happen in that volatile and uncertain world that we're seeing?
I think that's a very good question insofar as I think that those factors are very important. So historically, I would have said that copper was a relatively pure commodity market being influenced by its own supply demand fundamentals. If there wasn't enough of it about, it went up, and if there was too much of it around, it went down. And whilst it did care about macro themes, that was more insofar as they affected short-term demand. So if there was a crash, then fine, okay, copper demand goes down, fine. These days, I think copper has to take into account all of those change situations, and they are almost all relevant. We should talk in a bit more detail, but they're almost all relevant to the copper price. I'm happy actually to work through some of those. It would perhaps
Yeah,
be
let's go through
useful.
them
But
then.
so if I first say about deglobalization, the world has been a globalized world. The whole Chimerica model was how we were working. Designed in California, built in China, fine, all worked well. It's very tempting to say, oh, this is just Mr. Trump. It's not. It's been happening for a while. The inherent contradictions of being a major economy without a manufacturing industry have become clearer and clearer to certainly the leaders of America, and I think latterly the leaders of Europe as well. And what that means is that industries are now having to focus on, instead of just an optimization problem where everything's just in time, everything's perfectly cost balanced, everything's super efficient, they've got a resiliency issue. They've got to have the resource and the inventory and the organizational strength and the national strength on a country level to be able to survive things like pandemics, but also things like geopolitical tension. So where you used to have a just-in-time mentality, I think you now have to have a just-in-case mentality. And I think that goes for countries and that goes for companies and it goes for your raw material supply. You can't build anything without, let's say, copper, anything electrical without copper to a large extent. There'll be lots of generalizations in this podcast. That was one of them. But it's a fair generalization that in general, you can't build anything without these things. So how can you therefore be your factory would close if your copper delivery doesn't come in within a 24-hour period? It's too critical, it's too important. And we've seen in other critical metals what happens when they actually do run out and factories actually do close when they can't get the rare earths or the tungsten or whatever it might be. So it is a new world and that is affecting copper pricing. And you simply can't run the same amount of low inventories that you used to. You could get away with low inventories very easily in the past because just about enough was always enough. But those low inventories are you can't do it. So I think the whole world needs to carry more inventory. You know, have US announcing Project Vault. China's done it for years. No one else has in terms of holding strategic inventory in copper. I think everyone else will.
Yeah. It's interesting because the whole point of the 7 years of feast and famine was to build the grains to hold for when the famine was happening. So that sounds like that theory's finally catching up.
Yeah, I do think that's interesting. Look, I think there's a really big picture question here. You asked a little bit at the beginning, you implied just about the current fundamentals. I think there's a big question. Does copper price current fundamentals, which it always used to, or does it actually price forward expectations? And I think we're in a world which is moving towards more pricing of forward expectations. And yeah, things like storing up material for those difficult times geopolitically has to be a forward expectation now. It's been announced, it will come. So just because there's lots of copper now, which there probably is actually, reasonably comfortable supplies of copper, just because there's comfortable supplies of copper now doesn't mean there'll be comfortable supplies in the future if every government in the world wants a bit of it.
So if the market is moving on that fear more than fundamentals, what do you think would have to change for the market to realize that actually the fundamentals haven't really moved dramatically
Yeah.
and they can calm things down a little bit?
Yeah, I hear you. So I would say prices are generally set by investment flows. And they're the ones who are pricing in those fears. It's investors who are pricing in those fears. It's a pension fund deciding it needs some raw material exposure because, for many and various reasons, not least the fact that their pensioners will in the future have to consume commodities, but also because it diversifies some of their other risks, it protects them in various ways. So, what would change would be if the investors decide they don't need that after all. And that is always a difficult question to answer. You know, how much is enough is always a difficult question for these sort of things. I'll be dramatic and then I'll be perhaps a little bit more moderate. If you say that historically portfolio allocations of the world were roughly 60-40 in terms of 60% equities, 40% bonds, that gave you your protected, balanced portfolio. Actually, bonds haven't been working in that portfolio as much of protection now for years. Actually, something like gold and silver has been. And so, what if the world decides it wants to hedge its portfolios with gold and silver instead of with bonds? Even a percentage of that, even a tiny percentage of that, would be very dramatic. And if we're in a world where gold and silver are going to the moon, well, then what about other metals? And I think that some of that dynamic has been what's driving prices. And whilst that dynamic continues, prices will continue to perhaps be in a new paradigm. In the end, fundamentals win because copper price is set to a large extent by how much can be got out of the ground at what price, broadly. But at the moment, because there's not a huge amount of excess being got out of the ground, even though there is a bit of excess at the moment, there's not a huge amount of excess being got out of the ground. And B, in the future, basis most sensible predictions, there's going to be significant shortage of copper out the ground. And C, it takes a long time. It takes years and years and years to build. I mean, people give analysis that says it takes 25 to 30 years to develop a copper mine. Now, okay, we can do something within shorter timeframes than that. You can expand existing production, things like that. And there's mines that are in the process of that 25-year process. But it still takes a long time. You don't just go to the shop and order more copper. it has to be mined. And that takes years and lots of earth moving and billions of dollars of investment. And so, yeah, it can take a long time to rebalance the market as well.
And it's interesting, as you were speaking, I was thinking it's almost as if fear has actually become a fundamental in itself. It's sort of become this self-fulfilling prophecy in that everyone's scared, so they start stockpiling. All of this is built into a position where it has created that fundamental almost. It stopped being noise.
No, I hear you. I think if you look at gold, part of the argument for saying that gold is useful in portfolios is because it's been going up, and it's been going up because it's useful in portfolios. But it only looks useful in portfolios because it's been going up, and so so it all does get quite circular, and maybe that's a useful thing to turn to. All right, this is a anecdote given to me by my friend, and I said I'd put it into the podcast for him because I thought it was actually very good. He was at a crypto conference. They do still hold them, and they were all talking about gold, silver, and copper. And he, because he knew something about copper, said, "Mate, what do you know about copper?" One of the obviously very smart crypto guys said, "What do you know about money?" And I think that is a really good summary of what's going on. In the end, the copper price is a formula. It's dollars per ton. So there's a ton of copper that comes into it. That's the fundamental, but it's also a dollar. And if you no longer trust the denominator of the dollar, then the numerator of the copper goes up in value. And I do think that's a meaningful part of what's going on here. Copper prices are all-time lows in gold. So in gold terms, copper prices are all-time lows. The denominator really matters. So I think we do have to think about the nature of money. Do you want a piece of copper, or do you want an IOU from Rachel Reeves? Which would you prefer? Because that's what money is. It's an IOU from the Fed. It's an IOU from Bank of England or from the ECB. And in this current world, when the governments are the most indebted people on the planet and have no perceivable desire to want to ever pay those back, then which do you want? Take the IOU or take a bit of gold?
Do you think that starts to make copper more like a store of value like gold, feel closer to gold than being an industrial metal in a way?
I believe copper is a bit of a hybrid. Look, copper has been used in coinage forever since the beginning of recorded history. There have been copper coins, but it's also naturally very industrial. I'm primarily industrial. Not that many people are storing copper in their back gardens as savings, not even me, but it does have a store value function as such, is a hybrid. It's an asset that's nobody's debt. It doesn't depend on the system of money in the same way. And as such, it is a hybrid. So yeah, it does get some bid there. Look, in the end, I do think it is probably still worth me repeating. Fundamentals still matter. But in the short term, actually, the currency is also a fundamental because that is part of the price.
So, David, when you talk about it and you look at it like that, you mentioned a minute ago that you've seen a flow of money into copper from Bitcoin. How much of that do you think has come into copper? Because we keep hearing that.
Yes, I'll slightly change it. So I think there's been some really big speculative flows in copper. I actually think, and this is also probably under-commented on, I think quite a few of those speculative flows have been coming from China. We have seen quite significant investment flows, really quite significant investment flows and price dynamics in China. If you've looked over the last 3 months as markets have gone higher, a lot of that's been led by the Asian time zone. And a lot of that, it's not so much industry, it's the speculator. Now, why are they doing that? I think what else would you invest in if you're Chinese is one question. So property has been a bit of a disaster, and as we all know, in the last 5 years. So property's not great. Everything else, again, is it subject to government confiscation, government policy, whereas copper feels safe to them. It's a market that China's very important in, so they feel that they understand the dynamics of China well. I think it makes sense for there to be Asian flows. Now, Asian flows like that can flow both ways. So just because they've been the big buyer, they could be the big seller for the rest of the year. I don't think actually Western speculative flows have been a huge factor. They've been normal, let's put it that way. So there have been speculative flows for sure, but they're not outsized to the speculative flows we had, let's say in 2019, 2020, 21. They're similar. It's not like there's been something disproportionate from then, but the Asian flows have been disproportionate from then. They've been substantially bigger, which maybe makes sense. 2021, China was in a very severe lockdown. They're feeling better about the world at the moment. China makes the best products in the world at the best prices. What's not to like?
Okay. Well, you talked there about copper feeling closer maybe to gold with that value. What risk do you think that disconnect between the price and the actual usage is going to create? Because copper's always reflected the health of the global economy.
I suppose what I am saying is some of the old assumptions can't be held to be true. As to the risk of too high prices is always substitution. It always has been. And at some price, you will get substitution. The two things that I would say protects copper, one of them is that actually this has been going on for quite a long time. Most substitution of copper, just as a background, is likely to be into aluminium. That's the prime substitute for copper. Copper has been able to be substituted into aluminium for a long time. And a lot of it has been. A lot of the easy stuff to substitute, anything that was easy has been done. Because look, the copper price reached $9,000 cash price in 2006. We've had 20 years of, let's say, high-ish copper prices that aren't too different from where we are now. We're 12,500 now, but we were 9,000 last year. So it hadn't moved for 20 odd years in many ways. So a lot of that substitution is mature, has happened. It's not that there's suddenly a huge wave of substitution coming. However, if copper went absolutely crazy, then people would do if copper goes to 30,000, there will be worth telling all of your engineers in every factory, work out a way for me to use less copper because of the price. But the other thing I would say that is defensive for copper, look, it's just the best. It's the best conductor. 80% of copper use is in electrical conductivity, and it's the best. So that helps. Physics is copper's USP. B, copper goes into everything electrical, but it's a small component of the price of almost everything that it goes into. So although the copper price going up by 40%, let's say, from the lows last year, that doesn't affect the price of almost anything. This camera, my headset, it doesn't affect the price. It's immaterial. Other copper goes into the industrial grid. Well, okay, it affects the price of big cables, but the governments are going to do it anyway. It's not a price-driven decision. Copper goes into housing and construction. Well, yeah, fine. Again, you don't check the copper price when you're buying your house. So it's relatively price insensitive, relatively. So I don't think it causes too much harm, but at the margin, it does cause harm. At the margin, it will cause substitution.
Did you know that Fastmarkets subscribers gain access to more than 380 IOSCO-approved price assessments, including industry benchmarks for lithium carbonate and hydroxide, cobalt, nickel, and black mass? That's market-reflective data you can trust. Visit fastmarkets.com/podcast to discover how we support businesses like yours.
I do want to go back to the fundamental side of things because, you've said some of these things have changed, the old playbook's thrown out. And that playbook used to be actually really quite simple. China was the marginal buyer. That was where the demand came from. And when prices rose and China stopped buying, copper couldn't find a home and the price went down. This time around, we've seen China step back a little bit. I know they're still obviously there and you've talked about the speculative side, but the copper's all going to the US now and it's just sitting there. So tell me, are we getting something wrong about this new dynamic or is this the new norm?
So I do think this has been an extraordinary period of time in terms of you've had this very clever thing, really, and whether it was on purpose or by accident, the US has managed to build a strategic stockpile spending no money, which is like pretty clever trick. So what I mean by that is by announcing the potential of tariffs and by the Secretary of Commerce recommending 15% tariff in 2027 and 30% in 28, people have to price in that expectation that, let's say you give it a 30% chance, that's still got to be a 5% premium for 2027. If it's only a 30% chance that it's true, well, that 5% then starts to be the best premium in the world for 2027. And then, okay, it's got to go a little bit into the present, perhaps, because maybe you could position your copper now in America and then pick up 5% at the end of the year, if that happens. And it could be a 15% increase. Wow. So America has been sucking all this metal in on the risk of tariffs, which would give a one-off appreciation of any stock that sits in America to the holder. And that has been very powerful in the market because it has meant that there is always a bid for any spare ton of copper. Someone in America will want to buy it, to hold it, to get that pickup from the tariff when, stroke if, it comes. It's a pretty asymmetric bet. If you can buy it for flat at the same price and you've got a chance of a 15 to 30% increase, great. Why wouldn't you? It's a good trade. So America has been buying all of the metal in the world. America has been buying it, but people have been shipping it to America for the chance of that uplift. Actually, right here, right now, in the last few weeks, the premium to America, it's certainly in the nearby, so for delivery in the next 3 months, let's say, has disappeared. And that's because A, there's quite a lot of metal in America already, and B, Trump seems to be rowing back a bit on some of his tariff rhetoric. They were talking about rolling back steel and aluminium tariffs to some extent. Is that a world in which they're going to put a 15% tariff on copper? Maybe the expectation starts to change. So that is potentially quite a big difference because it means there's no longer that bid for any spare ton.
Well, that was what I was going to ask. This ambiguity is all very well, but it doesn't last forever. I mean, at some point, the music stops and there is a decision made. So walk me through those paths. Either tariffs are imposed or delayed, or they say, no, we're not going to have them. I mean, how do prices, the flows, behaviors change in each of those scenarios?
If you say there's 3 scenarios, if tariffs happen, that's one. Well, if tariffs happen, the US goes to an immediate premium, but there's no incentive to ship to the US anymore because the moment you ship to the US, you have to pay the tariff. So what there is a massive incentive for the guys who stockhold it in America to say, oh, great, I can now get out. So I can give you my stock and take a huge profit. Everybody gets a bonus. Happy days. So one, that disrupts the flows to America. They stop for a while and America just consumes its inventory. It doesn't import anymore. Again, I'm generalizing, I'm exaggerating, but to a large extent, there's no incentive to import for a while until you've consumed all that stock. The other end is they say there's never going to be a tariff ever again. Well, in that position where there's no tariff at all, then again, there's no incentive to ship, and this stockpile has got no future uplift in value. So you just want to sell it as quickly as you can to whoever you can just to get out of it. So in those 2 situations, actually, the no tariff and the definitely tariff, they're remarkably similar in terms of the behavior of the people with the stockpiles. They want to sell them. They're different in terms of global flows only insofar as if there's no tariff, you might see exports, whereas if there's tariff, that'll be locked into America. But other than that, America ceasing to buy for a bit is the logical progression. There is a third option, which is continued uncertainty. If I was managing the White House, I would try to play the continued uncertainty for longer. Why not? It's doing you no harm, but it doesn't really hurt your consumers and it does build an inventory. Fine. So that's the third option, is more of the same. There's going to be announcements fairly shortly in 3 months' time, maybe for 4 months' time.
Is that where your money is? Is that where you think it's happening?
Well, I don't see why not. Just why not? It's
Yeah.
not doing you any harm. Just keep it going somehow. Probably, I would say, look, we've looked at these future tariffs. We think there's a good argument for future tariffs, but we're going to delay it till 2028, or maybe put some certainty around. Anyway, look, I'm only speculating. Not worth listening to me on that. The only other thing, though, that I would note, which I think is worth thinking about, is that if either there's no tariff or there's tariff, and there's this big inventory that wants to get out, that might be quite a good opportunity for the US and for Project Vault to just take it because it would be there. So again, I wouldn't put 0 chance on that. And if that happens, I think the copper market that was waiting for all the metal to be released back might get a nasty surprise. So anyway, look, just to be very clear, I'm 100% speculating. I am Dave from London, who is just speculating on what the US government may or may not do. I have no idea.
It's amazing, though. I wonder whether you've ever seen a trade in all of your time of trading where doing nothing was this effective and just sort of creating this uncertainty.
I know.
Astonishing, really.
There's either some genius in the US State Department who thought this through, or whichever department it is, or else they've been lucky. But whatever it is, it's worked. And it is a model that everyone's thinking about. We do know that the US is very aware of what's happening. They know what's going on. They know the effect. They do understand what's going on. What I'm less clear about is whether it was intentional or not. But they definitely understand it well. I mean, actually, look, I'm going to be really positive about the US. The US is actually, I was going to say, the first government to take raw material supplies seriously. It's the second government, because China's been doing it for a while. But it's the first Western government to take raw material supplies seriously. And for that, we should all be thankful, because generally our governments in the West have been incredibly short-sighted.
Yeah.
So I think it's, credit to them for thinking about it.
Well, whether accidental or not, they definitely created the most cost-efficient strategic reserve in history effectively without actually having to spend anything yet.
100%.
Yeah.
It's magic.
It is magic. You mentioned the States there, David. I'd like to talk a little bit about what you're doing as well these days. Drakewood Talk
Yeah.
to me about Drakewood Capital Management. That's been a few years now.
So look, I don't know anything else apart from metals. So we're entirely metals focused. If people think metals, we want them to think about us. And we are not arrogant enough to think we know anything about other markets. It's tough to be an expert in one market, let alone many. So we focus on metals. We've got two active funds, which is a futures and options fund called the Drakewood Prospect Fund, which trades on the London Metal Exchange, the Commodity Exchange in New York, the SGX in Singapore, and it trades major metals. And that's the biggest fund we run. We run a metals and mining equities fund out of London, trading listed equities. And these funds are to capture the opportunities that we think our information base generates in the market. We also have quite a long record now and varied record now in what we would say co-invest strategies. What we mean by that is that if we see something interesting in the market, and I'll be specific in a minute, but if we see something interesting in the market, an investment in metals that makes really good sense, I'm always trying to think where in the metals value chain is the best value at the moment? Where's the best bit? Is it with the miner? Is it with an exploration company? Is it with a manufacturer at the end of the line or a trader in the middle? Where is the value? And we've done a number of co-invests where essentially we will invest a bit and then an investor will invest a larger chunk alongside us. So we always put our own resources on the line, but we have other partners, financial companies, pension funds, other funds, high net worth individuals who invest with us. And to give a few examples of that, one that has closed and finished, well, it hasn't closed, but was sold and finished. We had a big tube business in North America. We had 6 factories making copper and aluminium tubes, 4 in the US, 1 Mexico, 1 Canada. That was disposed of in 2024. There's a few legacy assets that we're still working on, but pretty much all gone. That had backing of a pension fund, a PE company, and some high net worths. Good multiple on invested capital. We also have made a number of loans to mining companies. So in my previous life at Red Kite, we had a big mine finance fund. We've been doing mine finance businesses, but purely as one-offs, where we will invest a bit alongside some other people. We've done that in the UK and North America. And then we've also looked at a few equity things, principally in mining equities. Again, some few mostly early stage mining companies that we think have got really good value. And again, alongside others. But also perhaps I shouldn't say perhaps the most interesting project. It's maybe the hardest project, but it is probably the most interesting, is an electronic waste recycling project in North America called Exurban. Again, there's some very significant investors alongside us there. In fact, those investors are sufficiently large and influential that they do a lot of the heavy lifting now, but we're alongside them. When we started the project, and we're alongside them in Exurban, which is taking electronic waste and recovering all the critical elements from it. The administration and others are very focused on the critical elements. There's 27 different elements in a printed circuit board. A good number of those are critical, most of them. And if you can recover those rather than either tossing them to landfill or exporting them overseas, you can recover them in the US. You increase the US's strategic strength in terms of critical minerals. In fact, I joke, it's the perfect investment. In a divided US, it's one of the very few investments that everybody likes, because the Republicans like it for the critical minerals side and the Democrats like it for the circular economy side. Everybody's happy.
Yeah, exactly. And it's not just copper as well, isn't it? It's tungsten. Talk to me a little bit about that, because you've got involved there.
Yes, very topical because it's just been funded to get into production. But we backed a UK tungsten project. Cognizant of my inherent bias, I think tungsten is one of the most critical metals. Every time you cut metal, every time you drill stone, you will use a tungsten carbide coated tool of some kind. And roughly 10% and maybe more now goes into military uses. It's the hardest metal. So for a lot of the modern weaponry, tungsten's critical. It's also roughly 85% produced in China. And if you add in Russia and Vietnam, you get into the 90s. So the West is very dependent. China has export controls in place. The US military has said it's not going to buy from China at all in the future. As such, it's a very critical metal. And so we got involved. The UK actually has a really good tungsten resource, very large. It mined up until 2018 when it closed due to low prices. At these prices, it's a fabulous opportunity, in my opinion. I have to give all sorts of disclaimers. Prices can go up as well as down, as well as up. But yes, I think it's a very interesting resource. I think it's fabulous to be bringing back metal mining to the UK. And this is a good vehicle to do it. It'll also process some tin and hopefully help enliven the whole region. There's a number of other good projects down there that we're not involved with, but there's a number of other good projects down there on the tin side. The UK could have quite an active mining region at these current prices and costs. There's been some technological improvements that also make it more commercial. That's very exciting. I've enjoyed being involved there.
Keeping yourself busy. David, I do want to ask you a few questions, little ones about your history, because can't let you get away without talking a little bit about that. Now, copper as a market is well known and very famous for humbling some incredibly smart people along the way. So I'd love to know, from your perspective, what is the hardest lesson that copper has taught you personally?
Look, I think generally, mark-to-market accounting is incredibly good for your humility, because there's a lot of jobs you can work at and you can think you're brilliant, but the only reason you think you're brilliant is that essentially it never gets measured. Whereas if you're copper trading, you get measured every day, and we've had some shocking losses over time, and you can't make an excuse. You lost money because you made a mistake, and there it is in black and white, the actual number in front of you. So no, I mean, it definitely humbles reputations hugely. And actually, my former boss used to say something like pride is the most expensive commodity. I think if you go in with pride, you will end up paying a really high price for it. You have to always be in a search for truth that has nothing to do with your own personal ego. And you have to be willing to say, I am wrong. And I'm going to be honest and say that is sometimes quite hard on a personal basis, but you got to. So
Yeah.
I don't know if that's a good enough answer.
No, it is. It
But
is. Very wise words as well. Yeah, for sure. In terms of the markets as well, have there ever been times when you've sat back and thought, oh my goodness, I didn't put that trade on? What's the best copper trade you never made or that you didn't put on, but that you wish you had?
I was disappointed last year to not be in the physical business. Most of my career, I've been in the physical business. Last year, that physical trade, the arbitrage trade, was like the most amazing physical trade opportunity there's ever been. And I wasn't in a place where I could do the physical trade. So that was mildly irritating. But hey, there you go. Look, that's just the way it is. We also did some other fabulous things last year, so I'm not going to think about it too much. But yeah, that was definitely a miss.
That kind of takes me back 20 or so years to your red kite era. And I wondered, when you talk about being involved in the physical trade, what the biggest myth about that era was for you, and specific to red kite, because there were quite a lot going around
There
at
was
that
lots.
point, I
There was
recall.
lots. I used to think, in fact, the only real advantage we had was knowing that most of the stuff that we were being told we were doing wasn't true. So people were saying essentially we were hiding metal. We were making it artificially tight, and it was all red kite. It was all a put-up job. It was all just a stitch up. There was a number of people that would have sworn up and down that that was the case. So the one thing we did know was that wasn't true. But because it got boring saying that's not true, my view at the time was, no, let's start talking about this a bit differently. I'd go say, yes, we are hiding metal. We're hiding hundreds of thousands of tons. I'll tell you a secret. The way we hide it is we buy it, we then put it in a ship, and we ship it to China. And then when it gets to China, we give it to people, and they hide it in their factories. And then they hide it even better. They hide it in their products. And then once they finish hiding it in their products, they hide it in buildings and in infrastructure and things like that. People will never find this copper. It's so well hidden. And it, because it's just, it was complete nonsense. I mean, it was always complete nonsense. I mean, that's not to say we didn't have inventory. Everybody has inventory. But in terms of actually some dastardly plot, it was all nonsense. What it was an incredible boom where China was consuming vast amounts of copper to putting it into buildings and infrastructure and products. And that was definitely hiding the copper. Hiding copper in furnaces is always the best place to hide it.
I couldn't agree with you more. I do remember that era really well. David, I wanted to finish by looking a little bit further forward. So I know you don't follow the pack. So go on then. What's your most contrarian view on copper today? Something the market might think is a little bit crazy, but that actually could realistically play out over the next few years.
Well, look, but this is not going to be quite contrarian, because I think there's quite a few people saying this sort of thing. But the combination of AI and robotics is really interesting. So firstly, just simply to build the AIs, a lot of copper, the data centers, and more importantly, the copper to empower the grid, to enable the grid to power the AI data centers. So there's that. Now, people are talking about that, so I'm not going to talk about that. What I am going to talk about, though, is every product is basically human ingenuity plus raw materials gives you a product. Now, we're throwing a bit of labor in there as well. So let's put it ingenuity plus labor plus raw materials equals a product. And in raw materials, I'm including energy. What the AI revolution is doing is removing and adding vast capacity into those constraints. So human ingenuity, intelligence, we are now making intelligence. Let's say it would take 16 to 18 years to make a human intelligence, such that a human is intelligent enough to be productively contributing to the economy of the world. Well, guess what? The AI is making the AI to make the intelligence. It's on an exponential growth of intelligence. So your ingenuity is no longer a limiting factor. Your labor, if that's a robot being assembled by AI, powered by AI, I mean, again, all that you need to make any product suddenly starts to be the raw material. That's it, nothing else. You don't need the people, you don't need the ingenuity. It's only a raw material constraint. You can make every product at a very low marginal cost that is purely energy, raw materials, and the rest gets done for you. If that's true, in this emerging world, all that matters is the raw material and the energy being as part of that raw material mix. That is an interesting world to think about, because historically all that's mattered is the manufacturing capability. That's why Britain got an empire. That's why China's exploded in the last few years. That's why America dominated the world. Suddenly that manufacturing ability is just the matter of pressing go on a AI robot or whatever. The only thing that matters is raw materials. So I think that is worth thinking about. Look, it's not something to trade tomorrow. The technology is far enough away. But what is the constraint in a new AI and robotics empowered world? I think it's only raw materials. And as such, for most of my career, commodities have been of an afterthought. Oh, yeah, and we need to buy some copper as well. Fine. Suddenly they become the first thought that your production capability is unlimited except by the raw material you can get.
Yeah. And I think add to that raw material list power, cheap,
Yeah,
always
power,
on
100%.
power, and
100%.
water as well, because
Yep.
they need
Yep.
water, power. Those are limitations at the moment.
100%. And both of those I'm counting as raw material. And the power side is obviously particularly interesting for copper, because not only is copper a raw material going into the product, but it's also the key enabler of the power as well. That's why I'm saying to you, I think it is going to be a very interesting next few years. I don't think we're done insofar as like this is the end of excitement in the copper market. I don't think we're entering 7 years of famine, because I think that's going to be quite transformatory as it happens. And things happen fast in AI. So 7 years, that's a very long time in AI. 7 weeks is a long time in AI. So yeah, fun times.
It is fun times.
I do think it'll be fun times. Look, as I say, just at the moment, and I think the only health warning at the moment is right here, right now, there's enough copper around. But if you believe that future story, maybe it's your last chance to buy.
Perfect. I think that's a really, really great place to leave things. David, that was a masterclass in how copper really works beneath the headlines. Thank you so much for joining the show. It's been
I love it.
such a pleasure.
It's really good. I'm afraid if I have a weakness, it is wanting to talk too much about copper. So that's
You're always welcome to do it here.
brilliant.
Brilliant. Thank you.
The Fastmarkets dashboard is an intuitive, powerful platform accessible through desktop, browser, or mobile app. Subscribers can build their own workspace or duplicate an existing market created by Fastmarkets experts, including former traders, buyers, and analysts. Access hundreds of IOSCO-approved price assessments, including industry benchmarks for key commodities like lithium, cobalt, and nickel. Head to fastmarkets.com/podcast to learn how you can access the data your business needs with Fastmarkets.
Well, that was fascinating, as expected. To chat through some of David's ideas, I'm going to bring in Will Adams, my friend and colleague at Fastmarkets. Hi, Will. How are you doing?
Yeah, good. Thank you, Andrew. Very good. And yourself?
Yeah, not too bad. I know you were listening with me to David Lilley there, and I know that you have an equally long history in the copper industry and have a great knowledge of the sector. So with your research hat on, Will, I thought we could talk about some of the things that David said.
Yeah, it is very interesting. He obviously knows the market inside out and been involved with it a long, long time. And I think it's a really interesting time for copper. We've moved into record high prices recently. It just seems like we've moved into a different part of copper's future, I suppose. And there are various things which he's mentioned which are behind that. So, yeah, I think it's going to be an interesting time ahead.
Yeah, as you just said, and he was laying out that new era for copper. He kind of set out a various number of reasons why that was the case at the moment. Was there one that stood out the most to you?
Yeah, I think where he said copper's moved from a just-in-time market to a just-in-case market, I thought that was, very meaningful. If you go back 2 or 3 or 4 years, governments tended to let markets sort themselves out, laws of supply and demand. We had sort of the disruptions from COVID, we've had the Russian invasion of Ukraine, we've had the US sanctions. So all these things have really disrupted the supply chain. And I think governments now realize, and this is running in parallel, should I say, with new sort of areas of demand for copper, from electrification, from AI, from the increase in defense spending as well, and building out the power grids. I think governments suddenly realize that actually these are metals we cannot do without. So we have to build our own supply chains, or we have to secure that supply. And that's meant that they have added copper amongst many other metals and minerals to their critical minerals list. And, they're much more focused on it. They're much more concerned about it. And it's dawned on them that it does take a long time to build up a lot of these supply chains. And as a result of that, they are working hard to sort of build up these supply chains and try to get on top of it.
Yeah, absolutely. That resilience aspect is really important right now. His most forward looking idea was that AI and robotics are going to shift the constraint from labor and ingenuity to raw materials. It made me think, if raw materials do become the real bottleneck, does that guarantee even higher prices, or do you think it just guarantees high volatility for the copper market and other commodities that are going to benefit?
It's really interesting if you look at a long-term price chart of copper. If you go before 2002, we were at a fairly range-bound market. And then when you had the super cycle coming on in 2003, copper just moved into a totally new playing field, much higher, and was much more volatile all the way through the end of the super cycle. And then we had the great financial crisis. Then you've had the COVID sell-off, and then you've had the COVID rebound. Just recently, we've totally broken up, smashed up through that again, as we did in 2002 at the super cycle. So I think we are moving into a new sort of playing field now, and therefore we will need higher copper prices to make sure that new supply is brought online. If you look at the electrification, if you look at AI, it does mean we're going to need more copper per person, and therefore we need to incentivize that new investment in that production. Again, I think it's really important for people to realize just how long it takes to build a new greenfield copper mine.
Oh, absolutely. I mean, in the US, look how long it's taking over here these days, even with all of the additional impetus that we're seeing, which is why I think as well, we've touched on this too, the striking idea of the US building an unofficial stockpile without actually having to spend a dollar purely through that policy ambiguity related to tariffs. Do you think that's a masterstroke of policy, or I can't work out if it's an unintended distortion that's going to painfully unwind, and how fragile it actually is? Because that ambiguity is not sustainable forever. Because at some point, I would imagine the market's going to force a decision of some kind.
By threatening to have tariffs on copper and having seen what's happened in aluminium, the market quite rightly said, okay, well, let's position ourselves to take advantage of that. There's been a massive restock. And as a result of that, there's been a big distortion in markets. It's impacted regional premiums as well, whereas the market overall was probably going to be in a slight surplus last year. We did end up having quite a few supply disruptions as well. And now it's more of a balanced market, a small deficit. But what's happened is that movement of metal to the US has made the market feel much tighter. And hence, even though we've had a roughly balanced market, we still managed to see sort of record high prices because I think of the distortion by the metal moving to the US. And now at one stage, the US COMEX premium over LME was significant. So that's attracting the metal into the US. That premium is now unwound. There's been no direct comment on what's going to happen to Section 232 copper tariffs, but I think the market feels that they're either not going to be introduced or any decision will be delayed, hence the COMEX premium has disappeared. But now you've got to question what happens to that copper. Does it start to flow out of the US again? You've got premiums in Europe are much higher than they are in the US and much higher than they are in China as well. So yes, that is going to be key now, whether that copper tied up in the US, whether it now flows back into the rest of the world, and that creates more availability, which you would expect then would sort of weigh on prices.
Yeah, it's interesting because obviously in the background of all of this now, you've got Project Vault, which has come along. The idea of creating a stockpile, creating that strategic reserve for the US. Do we see them just decide, the US government decide that it's going to swoop up all the copper that it can and stick it into storage for its stockpile, and there you go, one and done. It doesn't need to worry about it. I mean, that's a real possibility.
Yeah, that could be an interesting play because that would then take up all that surplus copper that has built up there and in effect take it off market. So the market would be that much tighter again. If they were going to stockpile and have to pay the premiums that we were seeing, obviously that would cost them a lot more money now that the premium's gone away, but just because there is the metal there, it doesn't necessarily mean it's for sale to the government, but that's another story.
David also downplayed substitution risks. He argued that most of the easy substitution has already happened. Do you think that substitution risk is overstated? We do hear about it quite a lot, or do you think it just lags prices?
And that's, how I see it as well. There has been substitution over the years. You've had a huge price differential anyway to encourage that substitution. And talking to some of our customers, they say there's a quality risk that if they go and switch to something and then, that it doesn't work quite so well, then that could affect their brand and things like that. So it's not as easy as said, and it does take time. And I'd say I think a lot of it's already happened. So, and as David said, at the end of the day, even though copper price is expensive, the amount of copper in the end article is probably relatively small for a lot of things, and therefore it's probably price inelastic.
This is why people love copper. Will, thank you so much for chatting today. Again, another really interesting conversation and a hot topic as well.
Yeah, very interesting, Andrea. Thank you once again for having me on.
So everyone, please stay tuned for our new market briefing, which is going to be focused on the wider commodities landscape. So that includes metals and forest products and agriculture and carbon. So keep an eye out for that in your Fast Forward feed. And to do that, subscribe on the Fastmarkets website or anywhere you get your podcast.